Per usual, being on the channel is for educational purposes only. It is not intended as financial advice. Hope everyone had a good weekend and Father's Day. Bitcoin doing a whole lot of nothing over the weekend. And if we look at previous halvings, which is what this is here, we are doing exactly what we've done previous halving periods, where early on we do a whole lot of nothing. So this is day 57 post-halving. The black line there is 2024. And we'll look at the previous cloud picture on the previous halvings. And, not much going on. Not much going on across the board. These are our drawdowns in bull market periods. Bears want what I think would be 35% drawdown, 40% drawdown. Not saying it's impossible. It's just harder to get that when we have been flat for 100 days, in my opinion. It's easier to get those deeper drawdowns when we sort of shoot up like a roller coaster, or like a plane stalling out. If we get our 40% plus drawdown, then that probably changes a lot of things, and I'll point out what that changes, but certainly not saying we can't go down, but I remain pretty bullish across the board. These are the ETF flows. A lot of people learning for the first time last week what a basis trade was, what futures were, etc., etc. The flows need to be taken into context. They cannot be taken as a single data point and extrapolated to claim conspiracy theory or malfeasance or Coinbase doing something, whatever, right? That is not what's happening here, okay? We did have some outflows last week across the board through most products. Probably some of that is speculators who are net long coming out. Some of that is probably the basis trade coming out. On the month here, we are net positive, and we're still around 15 billion on the cumulative number. So not much has changed, right? What you really need to look at to put the ETFs into context is this data here. I'll put the link to this in the description of the video. This is free from BITO data. Top left panel is important because this is open interest. If open interest declines and matches ETF outflows, then there's probably a pretty good likelihood that on any given week, that outflow is potentially related to the basis trade. The basis trade remains attractive so long as the premium, the basis, is above the risk-free rate, whether that's the 10-year yield, the 2-year yield, treasuries, whatever, right? We're well above that. We're well above 5%. We're well above 5.25%. Up here at 10%. There's some fees involved. There's some other stuff involved. It's not 1-for-1 10%. That's not just completely free money. There's other stuff involved there. But the concern with one leg of that trade, the spot leg, and who the custodian would be is gone. Counterparty risk gone. Not an issue with the ETFs, at least relatively what it was before, which is what makes this trade even more attractive now versus a year ago or 2 years ago. I'm sure people were doing it and have been doing it forever, but this is kind of the first time with the combination of the ETFs that you can put on, what, 2 billion, right? We saw 2 billion in flows and price went nowhere. That's a big sign that someone's doing something, right? Someone's doing something that doesn't involve going net long. So things are getting a little bit more complicated, and this is a good little sanity check to see. Now, what's going to be interesting, if we see outflows from the ETFs and we don't see a drop in open interest, or better yet, if we see inflows in the ETFs and we don't see a spike in open interest, then at that point we can probably say, well, that is probably net long or someone going directionally long or whatever, right? It's not always 1-for-1. It's not always this or that. It's a mix of everything all the time, always. So you just have to use your best judgment. But it's certainly not BlackRock shorting Bitcoin or something. Like, that's not going on here. Before we go any further, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc. DBA Kraken. Thought it was interesting in this screenshot they have Bitcoin at 20K. So it's been a while since they took that screenshot. Looking at Bitcoin, volume-wise, we're still declining. I'm not going to talk about volume on any of the other charts, but usually that's to be expected with consolidation. Any consolidation period, whether it be rising, falling, ranging, a true consolidation will typically have declining volume. So that gives me hope, not cope, but hope that this would be an inverted head and shoulders possibility is still on the table. Ultimately, this is the only thing that matters. You know, I'm going to show 35 charts or whatever this is. The only thing that really matters is getting above 72. And everybody knows it. You show anybody this chart for the first time, they don't have to know anything about anything. They're going to tell you, yeah, that level is pretty important. So as long as we're above the cloud, we are bullish, full stop. That's my system. That's how I use it. You know, again, I'm just telling you guys what I'm doing, you guys and gals, 0.2% gals out there who watch this channel. So we remain bullish on the cloud. Things get interesting inside of the cloud. That's where we flip from bullish to neutral. Below the cloud is where we flip from neutral to bearish on trend on a high time frame. So we're certainly not there yet. We're down 10% in a week or something like that. Was it miners? Was it long-term holders? Was it Gox coins, FTX? I don't know. Like, there's a whole bunch of stuff this could be, right? None of it really matters in a sense that, again, all that matters is 72K. We can keep ranging over and over and over. As long as we're above the cloud, we're good. The best mean reversion level is 64.3 on the index, whatever the Kijun is for whichever chart you are trading. And we may even get a series of TK crisscrosses. We may get the cloud crisscrossing. This is just saying the conditions are set for higher prices. That's it. That's all it's saying. If we look at last halving, post-COVID, post-amazing down candle, we had recovery, reconsolidation, move higher, breakdown, and you can see the TK crisscrosses here over and over and over again. Price even went inside of the cloud for a little bit of that period. So even if we go back into the cloud and the cloud flips red, whatever else, right? It's not exactly over. It's not over. It's just temporary on pause. What would be worrying would be if all of this flipped bearish. If we get a bearish TK cross, a bearish cloud, price below cloud, that's when things get concerning. Very similar, actually, to mid-2019, where we ranged for a couple months there, and then finally everything flipped bearish, and then we were bearish for a couple months. So none of this happens overnight. None of this is going to happen in a week. It's just something to continue to watch, but I continue to remain bullish on it. And then if we look at the 2016 halving, that was post Bitfinex hack. That was that candle there, and slow recovery, and we didn't really look back after that. What the bears do have on their side here is, in both cases around halving, we had this massive down candle or event, Black Swan, that reset everything. We haven't had that yet. So I hear the bears on that. I get it. But ETFs are different. I think it's different now. It doesn't mean we can't get a Black Swan. It doesn't mean we can't get a 40% drawdown. It's just I don't know if we need to. I think time would actually be good enough. Are we going to stay flat for another 100 days? I doubt it. But similar to 2023, where we just sort of for 6 months did nothing, right? I mean, that's not off the table here. We could have a Q3 that is also chop, and then Q4 is go time. If we look at the 20-week moving average in the green, we, in a bull market, do not breach that level in a big way. So much like the cloud, that's another level to watch. That's a big, big, big warning sign where it's different this time in a bearish fashion. If we break below that level, that's at 62.7. There's a yearly pivot there. The 200-day moving average is at 57. And then the 200-week Black Swan level would be at 37K. Something else the bears are quick to point out is this is an M double top in the making. It's over, right? That is on the table, but that's not how I'm trading it. I'm not saying that's how it won't work out, but I don't think how that's going to work out. Here's the pitchfork. You can see where we have this grace period to the downside. We're more in the bearish half of the bullish pitchfork now. And once again, 72 would bring us back above the midpoint here, and it would allow us to explore 80, 90, whatever that is, higher. Lower, we're talking 57 again, which would basically be probably the 200-day moving average. There's a world where we pull back to, I don't know, some low similar to this, make this M double top, get everyone all bared up, and we bounce at the 200-day moving average. You know, this is just like random stuff that could happen, not something I'm expecting at all. Just trying to think how this could go wrong. And this is ultimately what the bears expect. The bears expect this to be an M double top, a failed consolidation, failed bullish consolidation, with a move basically to the 200-week moving average, right? Which is at 37. That would pull up slowly, so I don't think it would actually get there by the time we break down, but that's what people would be looking at. Not something we do in bull markets. Doesn't mean we can't, but it's certainly not something we do in bull markets. The one black swan that I think could actually get us there, not just by trying to predict this makes it not a black swan, but should the Eurozone currency explode, that may really put a bee in our bonnet for a little while, because you'd have a flight to safety to the dollar, I'd expect. I don't think you'd have a flight to safety to Bitcoin. So let's just hope that that doesn't happen, and I didn't speak that into existence, but with all of the Eurozone politics going to protectionism and isolationism, anti-immigration, I could see the push for anti-Euro sentiment. Those in Europe can let me know what it's like over there, because I have no clue, but that's something that could make the risk markets very angry. So that something like that would probably be initially very bearish for us, and then give us a nice recovery. So just, put that on the bearish board as a possibility. I want to talk a lot about ETFs and leverage stuff in this video. This is one of them. This is BITX. Previously, I'd been watching, I still am, BITX for a cloud breakout with a fully bullish cloud picture. We didn't quite get that. So this is on the bearish side of the cloud, and this is certainly an issue for anybody on leverage or in this product, because this trend is certainly not bullish on low time frames. One other thing I thought about doing, this is BITX against BTC, and this is probably a better chart to watch than BITX vanilla, because it gives you a better sense of how these breakouts look against the cloud. So even this favors just holding spot or one of the ETFs or whatever, right? It definitely favors that. MSTR, basically 2x BTC, is firmly in the bullish zone. It's got a cup and handle that it's working on, much like 72K for BTC. 1700, I think, is probably the level where if MSTR gets above that level, then it's probably go time. The cloud is saying right now, with this bullish TK cross price above cloud, it is go time. That is all I need to see as a cloud trader to say this is as bullish as it gets. I'm just not a believer personally, and that could be a big mistake again, but I just can't believe it. Now, Saylor's going to be buying 700, 800 million more BTC here pretty shortly. We've got Tether buying BTC most likely, I think, at the end of the quarter as well, unless they have decided to stop buying BTC up here, but they're one of the two whales that are still in this market on the buy side anyway. So trend-wise, Cloud is saying MSTR is a go. Looking at BITO against spot. Now this is interesting because I know a lot of people that trade all sorts of stuff. BITO has disconnected pretty significantly from launch. So launch date was 2021 Q4, and you can see the percentage here. It has not recovered. Part of this is because it got so big. There was roll risk on the futures, and there's a premium, and it's exposed to options, and then there's all this other stuff, right? So this is a great example of why spot ETFs are different than futures ETFs. This chart looks much, much, much worse than spot BTC. There's also fees in here. There's a dividend as well, which I'm not going to explain, but there's a dividend on this. It's kind of bizarre. So if you are trading this other stuff, definitely know what you're getting yourself into over the long haul. And then this is BITI. This is the inverse Bitcoin ETF, BITI. And one thing we don't want to see if we're bullish, or you do if you're bearish, would be a move through the cloud here from 8 to 11 would be the trade to take on the inverse side. And that would probably happen if we break the daily cloud, break to the downside. So there's always a trade somewhere on the Bitcoin side, especially with all these products. We don't have options on the spot ETFs yet, but that's to come. We don't have wirehouses buying this stuff yet. That's probably coming soonish. And speaking of things coming soonish, we've got the ETH ETF rumors on the dates now of the launch. Eric Balchunas of Bloomberg saying July 2nd. And I think there's a case to be made that we're bullish into the launch, and then post-launch, much like GBTC, we see outflows on the ETH product that eclipse the inflows, which may or may not bring the whole market down with it for a couple weeks. So that's something else we have to look forward to. And it'll be interesting if that lines up with bearishness to bullishness or bearishness on top of bearishness, right? You know, there's a planet where we are, I don't know, below 60 by July 2nd. They launch the ETFs and then all hell breaks loose with the ETH outflows and we just keep dumping, right? You know, that's not really a black swan, but that's one way we could also be bearish throughout the summer. Currently, this looks like a cup and handle on ETH, and it bounced on the Kijun, on the daily, on the cloud. So it looks good for now, and it's going to be interesting to see how far we get up here on this target. Do we see a breakout here? Do we see ETH above 3,900 without BTC above 72K? Something to think about. I don't think that's possible, personally, but sure, why not? Will ETH drag BTC up and then down? You know, if we're just like gaming out all the possible decision tree points, right? That's all I'm just doing here. But let's say, for instance, we see a break above 3,900 on ETH because of the ETFs. That brings BTC kicking and screaming above 72. And then immediately we just sell all the way back down basically to where we are now by mid-July. Just something to think about. ETH BTC is still very bearish based on cloud positioning, moving averages, and pitchfork here. The good news is I've seen plenty of these pitchforks on alts against Bitcoin over the years, and they do get broken eventually, right, during alt season. It's just not alt season yet, and it's going to be interesting to see how this looks. I had posited a multi-month inverted head and shoulders here with a right shoulder yet to be formed, where we see everything go bananas in like Q4, right? That's definitely in the cards for ETH BTC. Sol looks less bullish than ETH to me. Neutral, thin cloud. This probably flips entirely bearish here. The question then becomes, how far down does this actually retrace? This is the 200-day moving average right here. So where does it go? You know, if this is a head and shoulders, where does this really measure to? Do we just start crushing down basically to 100 on psychological levels? It's kind of a weird structure to paint support resist levels, but anywhere you have an ultimate high or an ultimate local low, you could draw a line there. So I like 100, I like 80, the yearly pivot. That's if this gets bearish. So it doesn't look great here, but the best case over the long term is that we sort of reset all of the momentum and the hype from Q4 and we get a death cross on the moving averages. Great. We get the cloud fully bearish. Great. It just makes the next trade that much easier versus sort of guessing here, going from bullish to neutral, but back to bullish before getting completely reset on everything. You know, it's just a better trade if this had just, you know, resets at this point, right? Just give it some time. Probably needs another couple months to make a decision. So there's definitely no rush there. I definitely think that the focus is going to be ETH just because of the ETFs. Obviously, and Sol does not have an ETF. So the Sol ETH chart also should be interesting because this might break down and break up in and around the ETFs with the ETH unlock. And you may think, what is this guy talking about? The ETH unlock is going to be nothing. Okay, that's also possible. I don't think that's what's going to happen. I think we're going to see a bunch of outflows there. And that could also drag Sol ETH down as well. As far as the other alts, man, it looks not great. It across the board, there are 150 million alts. Okay, so 10 of them on any given day are going to look amazing. I get it, but most of these at the higher cap end of the table have a head and shoulders on them. Even the mid caps, they do not look good. This is all head and shouldersville. I'm not touching any of this stuff. You can measure all these with fibs. You can say the link's not going to break down. That's fine. I don't care. The point here is, for me, if I'm trading this, I do not want to touch any of these until this resolves or invalidates. Invalidation for all of these would be a candle close above the right shoulder. So there's lots of time on these charts, but these are definitely signaling lower for alts across the board. And why are they signaling lower? Well, if we look at global liquidity and US liquidity, we're still ranging on US liquidity. Admittedly, we are bouncing quite a bit on US liquidity. That's trillion, by the way. So that's 6.2 trillion from 6 trillion. Global liquidity, at least based on TradingView's calculation, has slowly ticked down. And again, I keep going back to this idea of like, what if the euro explodes completely? Well, what is the global liquidity going to look like then? You know, that may be the ultimate thing that kills this rally. Some sort of global liquidity event. So we'll see. Let's hope not. But US liquidity ticking up slowly, still in the range. Global liquidity ticking down. DXY, speaking of failed head and shoulders, DXY at this point, you can probably call it a failed head and shoulders breakdown, which means this leans more bullish than bearish. It's back above the cloud. You have a bearish TK cross on this. So this is yet to get fully bullish. But based on what we're seeing on the euro, I doubt that this doesn't continue. You know, this index is mostly based on what happens with the euro, and the euro continues to go from worse to absolute wrecked. Okay, this looks very bad on the cloud. It's still in this broad range, much like the DXY, but also like the DXY, this whole thing could be a diamond top, whereas for the DXY, you can't see it, but this whole thing could be a diamond bottom. And if that's the case, then yes, we are probably going to the 40s. So be ready for that. You know, this is not what we want to see on the BTC side of things. We do not want to see DXY going to 108, 110, 112 again. The rest of the world has already started cutting their rates. We have not. If data in the US gets worse, the odds of cuts increase. So that may help keep the DXY down between Fed meetings. But until the Fed comes out and says, you know, we're going to cut next meeting or whatever, whenever the higher for longer is over, the DXY is going to be buoyant because of that. So we got some time here. And, you know, when we're teetering on the Bitcoin side, I do not like to see DXY strength, euro weakness, euro political chaos. You know, this is not what we want to see. We've also got banking chaos in the US. This is probably pretty underreported, but we had a bank explode, and by bank I mean credit union. And instead of the FDIC, they have the National Credit Union Administration, which I learned about Friday when I heard about this. This bank specifically only had 38.6 million in assets. So not a big deal in the grand scheme of things, but it could be the beginning of dominoes falling, where the higher for longer stuff is kicking in for whatever reason, whether it's commercial real estate or whatever. Or this could just be mismanagement. I don't know. I don't know any details about this bank, credit union, but interesting. Along the other lines for banking stuff, there was kind of a series of underreported things that I saw last week. There was also more sanctions for Russia. So there was some images of people in Russia at ATMs, and I don't know if those photos are real or not, or when the photos were taken, but here it's talking about a flight to the euro, so that may actually help us. You know, so it's a very interesting game going on globally. We've got B2B fintech neobanks exploding, getting hit with sanctions, getting hit with KYC AML issues. That was Flowbank. This is Evolve Bank. This is Mercury. This has been over the past month or two at this point. Synapse, which is a couple months old now, they went into bankruptcy, and there was this daisy chain of fintech apps. This article, you can listen to it on 2x, but it was super interesting. Very reminiscent of what happened with Luna and Celsius and BlockFi. You know, it's this app talking to this app, talking to this app, talking to this app. And it's like, man, I think we have a better system. I don't know if these guys know, but we have a better system. It's called the blockchain and Bitcoin. But anyway, very interesting, shedding light on what the heck's going on over there. If you look at the 10-year yield, the 10-year yield has gone in the opposite direction of the DXY. So if anything, this should help banks. I would assume it should help regional banks. And it should be bullish for BTC because we've been inversely correlated to the 10-year yield. The 10-year yield is actually highly correlated to US oil or the oil price. And that has been falling pretty significantly as well. TA on the 10-year yield would suggest some continued downside here with the inverted cup and handle through the cloud. Not fully bearish yet, but getting there. So this should be bullish for us because it makes the risk-free rate lower, and that means generally looser conditions for fun stuff. We're still broadly in the range that we've been in for the past year, so it's not that big of a deal, but we're headed in the right direction if we want risk to be bullish. And this is TLT, so this is the inverse of the yields. the bond prices, and even TLT is starting to look attractive as a trade. This is the crypto cloud, so it's the wrong cloud, but point is here, it's above the cloud. It has some sort of monstrous inverted head and shoulders here. We saw similar stuff on DOT and AVAX and Solana. As far as the technical structure here, these really weird and deep inverted head and shoulders that broke up in a big way. So this should provide relief to the underwater banks. There's also TMF if you're interested in, if you're a leverage enjoyer. There's a 3x 3x TLT called TMF. So I'm going to check out for the 5 people that care about that. But this is regional banks. And this chart still looks bearish. This still looks like we got some bank exploding to do as far as banks being insolvent. The market does not like how regional banks in this ETF are positioned right now, despite the falling 10-year yield rising TLT prices. And then we've got the IWM, which unfortunately looks a lot like alts. It looks potentially how BTC may look, where this looks like a bearish reversal in the making. This looks like there could be a reason between why alts and IWM look the same. IWM is 2,000 small companies, and they are also getting squeezed. So this looks very bearish for the IWM still. Looking at the S&P, though, you wouldn't know it. You wouldn't know anything's going on. You know, it's a tale of two cities. It's IWM, where this has been ranging for 6 months plus, versus the S&P, which basically has put in a new all-time high, I think every week since December, right? It's just nonstop. Most of that is the Mag 7, most of that's NVDA, but who cares? It's the index. And if this cup and handle plays out, it still has a little bit to go. It probably consolidates at the yearly pivot, if I had to guess. It's got a TKC clamp here. I don't like an entry up here, but it still looks plenty bullish to me. Plenty bullish on trend. Looks good. Looks very good. NVIDIA looks stretched, continues to look stretched. It is past the measured move of the pre-earnings inverted head and shoulders. And just for fun, I measured the last consolidation, which was over 6 months, and that exploded to a 3618 fib extension. So that consolidation was longer than the current consolidation before this move. So I don't think we go to the 3618, but if we do, it would be 175 on NVIDIA, past the R5 yearly pivot halfway through the year. Pretty wild. Something else that's also in the back of my mind, if NVIDIA reverses in a big way, what does that do for the entirety of the market? This is basically the breadth argument. But again, like, do I want to be worried about NVIDIA going south with Bitcoin just sort of hanging on at 66 or hanging on at 60 or whatever? Like, you know, that just tells me keep the size down, keep the leverage down, just wait for a better opportunity in case NVIDIA gets angry. SMCI is another one to watch. This has been ranging for many, many months at this point, and it's trying to cancel its head and shoulders. It's hard to see in the annotation there, but there's probably a trade coming up here within the next couple of weeks with a bullish Kumo breakout on SMCI. You know, everybody's kind of wondering, when are people going to take profit on NVIDIA? Not that they need to. And then where is that money going to go? Is it going to go into fixed income? Is it going to go completely risk off? Or is it going to start to trickle down into other stuff like Bitcoin or SMCI or other semi stuff or other small caps? You know, I don't think it goes that far. I don't think it goes into the IWM, but we may see a bump on something like SMCI in the next couple weeks. And lastly, coin still positioned well bullish TK cross on that, much like MSTR. And if you're bullish crypto, you're bullish ETFs, you're bullish custody, you're bullish base, you're bullish whatever else, right? Coin is great for long-term cycle exposure in that regard. So that's all I have for this one. A lot of stuff. I feel like I get longer every week. I start these videos saying to myself, okay, we're going to limit this to 10 charts and we're going to keep it nice and sweet. But hey, there's always something going on somewhere, right? That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.